A little over 2 hours ago, as part of the annual shareholder meeting for the Daily Journal, Charlie Munger sat down with Becky Quick from CNBC to answer a wide range of questions. It was Charlie Munger, so the session was full of insightful opinions and advice about the stock market. In this clip, we will examine some of the most interesting parts of the interview to learn Charlie's views on a wide range of issues, including Charlie's thoughts on China's impact on Buffett's stake and TSMC and Activision, the current macro environment, Costco, Disney, and more. Now, then, let's get down to business. Welcome back at Financial Fortune, your daily advisor that gives you news and tips for financial success. Just keep on watching. Munger explains his Alibaba mistake. And we start with what has to be the headline that Charlie Munger has called his investment Alibaba the worst mistake he's ever made. Take a look.
I regard Alibaba as one of the worst mistakes I ever made. Thinking about Alibaba, I got charmed with the idea of their position on the Chinese internet. I didn't stop to realize they're still a goddamn.
Later on in the meeting, he confirms that he continues to be a strong advocate for investing in Chinese companies.
And the other thing that helps in terms of the China prospects are that you can buy better, stronger companies at a cheaper valuation in China than you can in the United States. So you're getting the extra risk can be worth running given the extra value you get. That's why we're in China. It isn't like we prefer being in some foreign country. Of course, I'd rather be in Los Angeles right next to my house. It'd be more convenient. But I can't find that many investments, right next to my house.
There have also been substantial dangers connected to possible delistings. Furthermore, nobody can forget about the geopolitical tensions. At least for the time being, it appears that the threat of Chinese stocks being delisted from U.S. exchanges has been averted. While this is true, many investors continue to fret over geopolitical factors like China and Taiwan. But have no fear, Charlie has something to add to this discussion.
I would argue that the chances in a big confrontation from China have gone down, not up, because of what happened in the Ukraine. I think that the Chinese leader is a very smart, practical person. And Russia went into the Ukraine because it looked like a cakewalk. I don't think Taiwan looks like such a cakewalk anymore. I think it's off the table in China for a long, long time. And I think that helps the prospects of investors who invest in China.
Charlie also gave his thoughts on Taiwan Semiconductor, the world's largest chip maker. If you're curious about why Buffett exited the semiconductor industry, you should hear what Charlie has to say about TSMC.
The semiconductor industry is a very peculiar industry. In the semiconductor industry, you have to take all the money you've made, and with each new generation of chips, you throw in all the money you previously made. So it's compulsory reinvestment of everything if you want to stay in the game. Naturally, I hate a business like that. At Berkshire, we like a whole lot of surplus money to come in that we can do something else with. And of course, now, if you're enough ahead of it, like Taiwan Semiconductor is, that may be a good buy at these prices. It's not at all clear to me that they're not going to succeed mightily. But it's a difficult. It's a business with enormous promise for the big winner, but it's a difficult business in requiring everybody to keep increasing the bets on and on with all the money. And so it's not perfect, that semiconductor business. But remember when Intel owned the world? Intel was once the Taiwan semiconductor business of the world. Yeah. They invented the damn business, and they dominated it for decades. And it's not clear to me that Intel's going to have a very decent semiconductor business, getting as far behind as they are now.
Activision-Blizzard. The next clip I wanted to play again covers another controversial Berkshire Hathaway stock, and that is Activision-Blizzard. Take a look.
Berkshire has stock in Activision-Blizzard, and you can argue that whether that'll go through or not, I don't know, but that's a Jewish treasury bill.
Arbitrage? The arbitrage play on Activision?
Well, yes, an event arbitrage. I mean, but we sort of stopped doing it because it's such a crowded place. But here's little Berkshire doing it again in Activision-Blizzard. And Munger using a little leverage at the Daily Journal Corporation.
This is what he actually said on Activision then.
What are the ramifications of moving away from a close to zero interest rate policy? Warren and yourself have frequently spoken about Aesop and a bird in the hand is worth two in the bush to describe the essence of investment decision making. So what do you do now that the interest rate environment is changing?
Well, there's no question about the fact that as the interest rates have gone up, it's hostile to stock prices. But they should go up. We couldn't have kept them forever at zero. And I just think it's just one more damn thing to adapt to in investment life, is that there are headwinds and there are tailwinds. And one of the headwinds is inflation. And I think more inflation over the next 100 years is inevitable given the nature of democratic politics in a democracy. So I think we'll have more inflation. That's one of the reasons the Daily Journal owns securities instead of government bonds, owns common stocks instead of government bonds.
Charlie was also asked, do you think we're going to start seeing recurring inflation spikes like what happened in the 1970s? Will inflation be like the 1970s?
Charlie, Al Pitton writes in from Chicago and wants to know if you think we might have on and off waves of inflation like we did prior to when Volcker stepped in at the Fed in the 70s era.
Of course it will happen some in the future. Yes, I think we'll have some of that in the future.
Do you think we'll have it immediately, right now, with what the Jay Powell's dealing with?
I don't regard myself. I think I'm pretty good at long-run expectations, but I don't think I'm good at short-term wobbles. I don't have the faintest idea what's going to happen short-term.
Buying Costco stock.
As long as Costco keeps the faith with its strong culture and their extreme low markup policy, I don't see any stopping it. The trouble with Costco is it's 40 times earnings. But except for that, it's a perfect damn company. And it has a marvelous future. And it has a wonderful culture, and it's been run by wonderful people. And I love everything about Costco. I'm a total addict. And I'm never going to sell a share.
Disney losing its magic? Take a listen. Definitely is an interesting case.
But Disney is an interesting case. Practically every business that Disney has gotten tougher than it used to be. Again, welcome to human life. Think of how Disney once owned the world. Lion King was running a long run on the theater district of New York. They went from triumph to triumph, marching. All of a sudden, on practically every front, it's more difficult. This is what happens. Imagine Kodak, which totally dominated photography in the world. And they invented this new technology. Kodak wiped out its common shareholders.
You think Disney's headed down the same path, or you think that they'll be able to pivot? I mean, I know you followed the company closely.
No, I think Disney has a lot of assets in it, but
yeah.
It's unpleasant to have something. How would you like running the sports ESPN now at Disney compared to its heyday? It's going to be way harder for them.
The stock's up this year.
Movies look to me like it's going to be a bloodbath too. So it's not a bit easy. And it was easy. In the heyday of ESPN, Disney made nothing but money out of ESPN. I've never made an investment in a movie business in any way, shape, manner, or form. It always gives me the will it was. I don't like the unions. I don't like the crazy agents. I don't like the goddamn crazy lawyers. I don't like the crazy movie stars. I don't like the people who sell dope to the musicians. I mean, everything about it is not my culture. I liked those old English actors when they came over. You know, I grew up with them. But basically, movies is not my scene, so I've avoided it. It's always been very hard for the people who put up the money. It may be a very good place to make a living as an actor or a writer or something, or a musician, but it's a hard place to make money if you're an investor.
I think that's it for this video. Additionally, there is an abundance. You'll learn a lot about investing at this meeting, so I urge you to go and experience it for yourself. But seriously, guys, I need you to hit that like button on the video. You're encouraged to share your with that. I'll wrap this up and catch you in the next update.